Good afternoon. Welcome to GrainTV. My name is Cody Bills. This is Brock Shimano, and today is Friday, November 18th. All week long, we saw hard selling in the commodities. Brock, when the dust settled, where did we stand?
Yeah, at the end of today, Cody, corn was down 3.5 on December. Soybeans for January up 4. Wheat for December in Chicago up 4 1/4. Kansas City wheat for December up 3/4. We did see some buying come back in at the end of the session today. I attribute most of that to profit taking, some risk-off attitude as we head into the weekend. We know that a lot of information has been coming into the market during the weekend, so I think traders are starting to pull some of that risk off before we go out into the weekend. So,
all right. Well, considering all the selling, what sort of damage did we see in the chart this week?
Saw significant chart damage this week. We broke out of our recent range on Thursday, selling off by about 30 cents on the December corn contract. We fell through two key support levels on that December contract at 6.35 and 6.20. We headed towards $6 a day. We didn't quite make it. We ended up at 6.01 for a low, and I kind of expect this area to be a significant level going forward here for the next few sessions. Around this area, we're going to see some choppy trade. And, it's a key psychological level for traders and for producers alike. If we do end up falling below that, we're looking at longer-term trend support at 585.
All right. Now, just to break it down for producers over the weekend, what do you expect next week for corn trading?
Corn for December contract, I expect pretty choppy trade, right around that $6 level. We're probably going to experience some rather light volume compared to what we normally experience. We have a holiday in there. We have options expiration next Friday. And also, these traders aren't willing to really hold positions for long term with a lot of uncertainty in the world economics right now.
Well, this week's trade is over. We lost some cents on the bushels, but what can we learn from this last month's trade activity? That brings us to this week's Market Insights. There are two market insights that I want you folks to be able to take away. The first one is a plus to minus day on a report day. The second is massive price expansion and what that means for trading going forward. Let's take a look at the plus to minus. We're talking about the report that happened on November 9th, and that is this candle. Notice that we tried to move higher, we had resistance up here, and we failed. We were trading in the positive, and then we crossed back over zero, and now we're trading in the negative. We actually closed lower. What does that mean psychologically? That means that people were either holding longs or had speculative longs going into the report. They used this as a way to get out of the report. People weren't adding the longs on this last report day. And just look at the volume. That shows you the level of significance of this candle. It's just enormous volume. The next day we had confirmation. That's this candle right here. The next day we had confirmation. We traded down at our lows and closed down there. That's very bearish. This plus to minus move followed by confirmation and high volume tells me that the bulls are not in control after this report, and we saw serious selling from there on out. The second item here is charting landscape and massive price expansion. What I'm talking about here is October 11th, and I'm talking from $6, we rocketed higher, well over 30 cents. That means it was a very one-sided trade. We didn't have a ton of sellers. The bulls were in control. Well, when you get that kind of massive price expansion, when you come back through that area, we can slice right through those levels just as quick as we went higher. We saw that this week. Notice here, we traded down to the bottom side of this range. We bounced off it, cupped over, and then shot lower, over to $6, and then we found support at $6. It's a Friday. I didn't really expect us to penetrate $6. That's a serious support level. The bottom line here is that when you have the charting landscape and you don't have a serious battleground, I mean, this is an area where there was really no battle. Everyone was a bull. When there's no real battleground, price can move through those areas very quick. Put these insights into your toolbox. Use them on a rainy day. Marketing is a marathon, and we want to be able to use these tools and these lessons that we learn going forward and to improve our marketing. I'll finish off with one item here. It's a flash alert, and it's the fact that we're talking about December corn. We could be confirming soon a head and shoulders pattern. What do I mean by that? Well, this is December corn. Notice it's a bull market here. We put in a head and shoulders, and this is the right shoulder, and now we're moving back down. This is what we call the neckline, all right? That's the support that we have. If we penetrate that neckline, if we move below it, if we break that support, this will confirm a head and shoulders, and that means we're most likely going to enter a bear market and be going lower, all right? This is the head right here. This is the left shoulder. This is the right shoulder. I'm not saying that we're in a bear market yet, but what I am saying is we are in a very risky market. And we need to be thinking about how we're going to protect ourselves, our family, and our farms going forward. And we need to have strategies in place should we break those levels. Will you be profitable if we lose another 50 cents or a dollar? So,
certainly questions all producers need to think about. We're going to be looking at this as we move forward here. Follow us on Twitter. We'll be updating you throughout the day in the next few sessions. Get a hold of us at 877-GRAIN07 or take a demo to try out some of these charting techniques for yourself at grainhedge.com. We'll catch you on Tuesday.
Have a good one.